6 o'clock in London, it's 1 o'clock lunchtime in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco. Good morning to you, and good evening or nearly good night. It's 10:30 p.m. in Mumbai. Greetings, good morning, good afternoon, good evening, depending on where you are in the world. My name is Patrick L. Young. The IPO-VID Livestream, Series 3, the season finale, Episode 6. Starts here. Welcome to episode 18 in the week when GameStop turned game on, with perhaps the most epic short squeeze since the Volkswagen Porsche shenanigans rocked the German stock market a few years back. Meanwhile, how's this for swift redemption, albeit not in the bond buying sense? Since our last show, China's central bank governor has hinted in the last week that Ant Group's IPO could be revived. That, well, good grief. What about the heady sensory excitement for all those investment bankers robbed of Christmas last year when the greatest IPO of all time was pulled at the absolute last moment? And in the midst of all this came Ant's parental results. Alibaba, 37% growth in the last quarter. Some say they might have a monopoly problem in China. Meanwhile, in the European Union, they have a new word for the much vaunted, the elite, those supreme beings, what we call in the rest of the world, the 1%ers. Well, nowadays in the European Union, we call the 1%ers the vaccinated. You can tell things are going south when the Hungarians are buying Russian vaccines outside the EU's discredited central purchasing fiasco. That said, while Russian vaccines have been performing well in the latest test, I'm not entirely comfortable about the idea of being, well, preemptively relieved of the threat of COVID-19 by the Leonid Rink-devised vaccine. Now, please don't call me an anti-vaxxer. My specific concern is that Dr. Rink has a preeminent track record in biopharmaceuticals, but admittedly, that includes inventing Novichok. Elsewhere, China has topped the world's foreign direct investment tables for the first time ever as COVID upended the global economy and they defeated the long-time number one, the United States of America. I suspect they might motor back in the course of the near future. Of course, there's a constant stream of roaring 20s dialogue ongoing, and indeed one might make an argument for the thesis on multiple metrics of the century so far, or at least the decade so far. But at the same time, I have to say, in the course of this year, Europe has that look of being back in about 1974. The Dutch were rioting, in this case over COVID, what else? The Italian government collapsed. Good grief, I think that was 67, or maybe it's only 66. I can't remember. Does Bunga Bunga count as two governments? Anyway, whatever. Since the end of the Second World War, there have been nearly 70 of the Italian government variety. And now, Hungary buying their vaccines from Russia, as I meant before, as the EU's total cluster shambles of an attempt to do Soviet-style top-down vaccination centralization failed. Again, just like the 1970s. However, it has not to escape us during the course of this turbulent week for the European Union that the much embattled Mrs. von der Leyen, who apparently is blame-storming the rest of her secretariat as we speak, actually, this is a woman of true managerial genius. Let's face it, she has managed to unify Michel Barnier, Carl Bildt, the Archbishop of Canterbury, the Financial Times, aka the Brussels Bugle, and Nigel Farage, and all of the 17.4 million people who voted for Brexit in the first place. Gosh, surely even eclipses the ability of Robin Hood and the GameStop affair to manage to unify the Representative Alexandra Ocasio-Cortez and Senator Ted Cruz. It seems to have been a week where chaos came from unlikely achievements. From chaos came unlikely achievements. That sounds like a moniker for the London Stock Exchange Group's purchase of Refinitiv, which finally closed this week. All this and more, ladies and gentlemen, has already been covered in greater detail in Exchange Invest, the daily Bourse Business newsletter, which can come straight to your inbox for a modest fee, Monday through Friday. We even have a free Saturday edition for those who like a little bit of PLY piff, but not too much Boursalicious incentive. Send us an email or hit me, Patrick L. Young, on whatever social media you're watching this particular stream, and we can get you signed up to Understanding the Exchange Business every day, in between your weekly hit of the IPO-VID Livestream. Speaking of which, our guest today is Paul Humphrey. Paul Humphrey is the CEO of BMLL Technologies. He previously served as the interim CEO of Euronext London on the Bourse business side, and he was actually the global head of FICC, which is fixed income, commodities, and lots else besides at Euronext NV, responsible for the development and execution of strategy in fixed income, foreign exchange rates. Come on. Et al. Jonathan Cowan, thank you very much. Yes, it is a great guest. Once again, good to hear from you this evening. Lovely to have you on the show. Prior to that, Paul was the CEO of Electronic Broking and Information at Tullett Prebon, determining the group's strategy for electronic broking application development and information sales. Now, the thing that makes our guest particularly spectacularly interesting this evening is he is the man who has played all sides. I don't mean he's been a Brexiteer and a Remainer, because obviously everybody who was once a Remainer is now a Brexiteer. How can you possibly fail to be otherwise in the great British debate about the future of the independent nation? No. I mean, much more significant and long-term than that. Paul has been on the banking side. He's been on the broking side. He's been on the exchange side. And now he's working for a really funkalicious and exciting tech vendor that we're going to be talking about this evening. So if you're already excited, ladies and gentlemen, pop that like button down below. Get ready. Prime us with your questions. We're excited to hear them. Paul, good evening. Where are you in the world this evening?
Good evening, Patrick. What an intro, my God. I am in North London, sunny North London, and it was today, actually. Remarkably, at least we had a blue sky.
It's good to hear blue skies over North London. I'm sure Mrs. von der Leyen was upset by that too. Anyway, we'll try and get off the European meme for the time being. So tell us a little bit, I mean, talk us through this, because you have had the most fascinating career. You've played on all sides during the course of the game. The only thing you haven't been so far is a regulator, but there's still time for that, I'm sure, a point in your anecdotage. I'm sure you'll make an excellent one. So talk me through, I mean, how did you manage to get sucked into this wonderful business, and where did it go from there?
Well, I started life as a broker many years ago in the late 80s. A friend of mine suggested, why don't you become a Eurobond broker? And once I asked him what a Eurobond was, I got an interview and I got a job. Cut a very long story short, I had a glorious career at a company called Goldman, which is part of the modern day TP ICAP empire. Goldman became ICAP. Then I left after 13 years to go to a company no one had ever heard of, called Spear, Leeds and Kellogg. Your American viewers will know it very well. And within a year of being at Spear, Leeds and Kellogg, Spear, Leeds was bought by Goldman. And I will take lucky over smart any day. And I went from Goldman to Goldman in under 12 months. Fast forward, I then went to ABN Amro, where I adored my role at ABN. If RBS hadn't spotted the party, who knows, I may still be there today. At which point I was plucked back into broking by the infamous Terry Smith. I worked directly for him at Tullett Prebon, and I left when he left in 2014. And then I went to work for Euronext for Lee Hodgkinson at the time, and then left at the beginning of 19, and then subsequently took the role here at BMLL, which I'm adoring.
And it's fascinating, actually, thinking about it. I hadn't thought about this before. You had this interesting career where you had circuitously Duncan Niederauer, the man we describe in Exchange Investors, Destroyer, he actually played this amazing role as your mentor, and he probably never even met you, because he bought Spear, Leeds and Kellogg's, sucking you into Goldman Sachs. And then ultimately you went around to Euronext, which wouldn't have happened that you would have been at Euronext had it not been for him probably running nice Euronext, and then what took place afterwards with Intercontinental. Interesting.
Yeah, it's a clever trick we played with mirrors over the years, I think. It was we narrowly avoided each other.
You've managed to work with actually so many of the greats during the course of that time. Michael Spencer, Terry Smith, Good grief, you certainly, you're not bereft of characters to manage to put into your memoirs, although you may have to live a long time in order to be able to tell all the stories, I suppose, but maybe I might say that, you can possibly comment. Ladies and gentlemen, if you've got a question for Paul, ask away. There are so many topics we could get into. And actually, I mean, let's look at how interesting it has been in this recent time, because you moved to this fascinating vendor, BMLL Tech. So tell us a little bit about that.
So actually, within my last two roles, I ran two market data businesses. I oversaw the market data business at TP ICAP, which was largely a pre-trade data business. Then, of course, I oversaw the data business at Euronext during my stint as interim CEO, and that was, of course, a real-time business. Now I'm in the historic data business, and historic data has always been the underloved country cousin of the data world. I've got to tell you, I think it's the new gold. If you want predictive power from data, you need a long-ranging, deep history, and there's very few companies that have that. So now I'm tremendously excited by what we're doing here with historical data insight.
Okay, so, I mean, tell us a little bit about that, because it's absolutely intriguing what's been going on in recent times. And there are obviously vast quantities of different types of data company. Now, your data company, because I went around to visit you briefly, which puts me in the elite of people, because you were only in that office for about 4 hours before lockdown took place. It's incredible, because you really are, I mean, you're PhD centric. I mean, that's what I noticed about the discussions we were having when we were around there.
So, yes, it's true. What we do is we collect level 3 data from 45 different venues around the world. And when we say level 3, we mean every piece of activity that has happened on that venue that day. Every bid, every offer, every cancel, every correct, every flag, timestamp, all of it. One big end of day data dump. We take that from 45 different venues. Dare I say, we take it in 45 different formats, and the magic happens in the harmonization process. So if you want to track a stock, take Vodafone that trades on 6 different venues, and you want to look at all its order activity during the course of the day and have that as a harmonized set of data so that you can derive some insight out of it, there's a serious amount of engineering that goes into a data set like that to curate it in that way. Then, of course, as a quant, if you come in to put your hands on that data, you hit the ground running. They do say that 80% of a quant's time is spent gathering, cleansing, harmonizing, organizing data, and the last 20% of their time actually deriving anything useful from it. In short, we save them the 80% of the time. They can come into our data lab environment, find those curated libraries, and within a few lines of code, they've hit the ground running and they're deriving insight. Or if they're not a Python native quant, they can talk to us about the data that they want, and we can send it to them as a packet capture via API or FTP. So we effectively internalize the lab and sent the data out as output, which opened us up to a far wider community than just the pure quant army that is ever increasing every day.
Really interesting. I mean, you think about it, there's so many things you say there, because obviously, first of all, we needed electronic markets in order to manage to get this level of ability to do that. But most importantly, I mean, the thing that you mentioned in there, which is incredible, is I don't know who invented Python, and it probably wasn't a Mr. Python, it probably wasn't Monty Python, but it is amazing how that whole data scraping technology has really revolutionized markets for something that really started so that people could nick prices off eBay and see what was happening on Amazon. Well,
it's interesting. I mean, BMLL was formed at the end of 2014. It was a spin out from the University of Cambridge. And it came out the signal processing labs. We were founded by some very, very smart people indeed. BMLL stands for Bayesian Machine Learning on the Limit Order Book. Now, my founders have many wonderful attributes. Marketing clearly wasn't one of them. But it does give you an idea about what we do. I've clearly, Patrick, before you mention it, I wasn't taken on by the board to lead BMLL because my knowledge of Bayesian theorem. But the one thing I do know about Bayesian maths is that the events that happened yesterday are likely to determine what's going to happen tomorrow. So if you've got a deep, rich history going back 4 years, you're able to determine those patterns. And when you're putting that intelligence into your algo or making those trading decisions, you're doing it with a much higher degree of certainty of what the outcome's going to be. And that intelligence really only comes from historical data.
And rich historical data at that, which is why you're picking up every possible movement of the paperclip or whatever other information you can manage to get from those 45 markets. And it becomes really, really fascinating, I suppose, because you were talking about, I mean, looking at this whole business of conglomerating this data, which obviously is a huge amount of work, however you look at it, and it requires a lot of programming in advance. What do you have to do once you get your systems up and running to manage to make sure that that is all managing to keep going in line with the markets?
So, I mean, when you think about most of the historical data that is out there today and available from the large vendors, it's history that's created from storing real-time data. Well, real-time data will give you the traded price, the best bid offer, a couple of levels down, and the timestamp, effectively what we call level 1. And that is what the vast majority of historical data products are. As I said, the magic happens in our curation process. This won't be unusual to the large quantitative based in the cloud funds that are out there today, the Citadels, the XTXs, AQRs. They've been cloud native from the start, and they've been storing deep, rich history, and they knew what to do with it. Of course, they're not making their data or technology available anytime soon. Of course, it is one of their secret sources. Being based in the cloud is vital for this. Not only is it vital for the 15 petabytes of data that we've got in our lake, but it's the access to unlimited compute power. If you're going to take 45 sets of L3 data overnight and you want to bear down on that data to get those results curated, ready for the morning open, you've got to have access to unlimited compute power to do it. And that's what the cloud provides us. And I think that's one of the misnomers. When people make reference to the cloud, they think about storage. They don't think about the fact that it gives you access to unlimited compute power, because believe me, what we do with data, I'd be sitting in a server room right now, and it'd be vastly bigger than my office if we had to do this on-prem.
Well, I mean, it's incredible, actually, when you talk about 15 petabytes of data, that's just an astounding amount. I mean, that's more, so your lake is what, vastly more than the accumulated knowledge of human history to about 1850, if I'm not incorrect, something like that. I remember actually, funny enough, it's in this book, Victory or Death. I discussed it in there somewhere along the lines. I can't remember what exactly the numbers were at this point in time, but most people are only going through, I mean, until the 18th century, I think total world knowledge was in gigabytes. I mean, petabytes is absolutely astonishing. And you're processing that at speed, which is
absolutely
quite together. I mean, that's amazing. And actually, we've got a question from the audience. What a very interesting opening question, because we've been talking about Bayesian theory and PhDs and all those other things, which I can remember from my days at Tullett in Tokyo, were commonplace discussions on the floors of all of the desks at all points in time, particularly in, say, FRAs and forward money markets. So someone's asking, actually, rather than what were the differences between managing an IDB and a data-driven business like BML Tech, are there actually any similarities between, you know, having a quick dip in the morning through the 15 petabyte lake and then carrying on? Are there any similarities between managing an IDB and managing a data-driven company like BMLL Tech, Paul?
Well, we're definitely not going to be sharing any war stories on the IDB side this evening, Patrick.
Absolutely
But,
not. Before the war,
that's for
we
sure.
will do that for 90% of our viewers. No.
No, we're definitely not going to be doing that. I would say the only thing where there's a similarity is managing a business through change. You know, these businesses have changed beyond recognition since certainly the times when I started managing. And you've got to be able to manage change and embrace it when it comes along. So, no, is there any other similarities between managing an IDB and the data-driven BMLL tech? No, not really. But certainly managing change has been key to both roles.
That's a very interesting. That's a great answer, actually, managing change the whole way through. And it also raises the interesting question of, ultimately, where some of the IDB staff were quite fast at changing, a lot probably weren't. But I see today that somebody's talking about HSBC. This is an interesting aside. HSBC are saying that they've got an AI robot that is now available that can do your OTC foreign exchange options for you, which I think is absolutely fascinating. Rumored that some of the other IDBs have just ordered 1,500 each in order to replace their staff could not be confirmed at the time that we were asking about this. Wow, Dejan Lekic is making a great comment in the comments. Paul is the best CEO ever. Not clear whether he's one of your PhDs or whether he's somebody who used to be from your Garvan days, but I would guess probably more recent than that because he's on the keyboard.
Well, he's one of ours. He's one of ours, very much so. And thank him for saying that. One thing that's been really interesting, you mentioned that you're one of the only esteemed guests that came into our office, Patrick. You'll remember I joined BMLL at the end of 2019, knowing that we would be moving out of our offices in Victoria at the end of February. So, of course, we negotiated our new office in St James's, we had it fitted out, and we moved in at the beginning of March. So far today, I've had 9 full working days in that office since the beginning of March. 7 of them, and in that first 7, of course, you came to visit us in London. So I've been, it's great to hear, for Dan to give me that compliment. I've run teams throughout my professional life. This particular team, I've run 2 months in reality and 11 months in virtual reality since we closed the office and all started working from home. And that has its challenges. I came into BMLL. We had to redefine our strategy, redefine our messaging. If you'd have looked at our website in 2019, you'd be accused of thinking we look like an academic study group rather than a business that sold product. So, of course, we revamped our messaging. We determined our strategy. The team got right behind me, and we've certainly had a fantastic 2020. Doing that on Zoom, on Teams, all day long takes real effort. But I'm proud to say the team are right behind me.
That's absolutely fantastic, and indeed you're being abused for your only sin is being an Arsenal supporter by Dejan. Yes, exactly. By Emirates, the signpost of Arsenal fans the world over. What would I know? I'm not interested in football. I'm a Southampton fan. Anyway, Dejan, thank you very much. That was very kind of you to make that. It's a great story though, Paul, because we're talking about that. Yes, okay, I suppose one could say there have been wars take place in 6 days and so on in recent times, but I mean, the idea of 9 days actually being in the same office as your staff and then having to do 11 months at a distance, I mean, that's quite incredible. And it also, the cloud thing is really fascinating because Jonathan Cowan has just asked us a great question. It's a bit of an epic, so it's going to take me a moment to read it, but as Jonathan notes, one of my concerns with clouds is that a few woke employees could decide they don't like banking or some other business area, and before you know it, you're having unexplained problems and your business is ruined. It's an interesting, I mean, it's a valid concern and certainly something we have to manage our way through, I suppose, Paul.
Well, I have to say, I mean, first of all, we're observing Amazon best practices at all time. I mean, we work with, clearly, many of our customers are large global exchanges and they're large global banks. Security is a primary concern of ours. I mean, with some of the exchanges, not only obviously we have their public data, which we curate and put into our lake. Well, one or two exchanges, we're now combining their anonymized private data, liquidity providing data, and we're combining that with our public data. So you can imagine the level of infosec you are going through with an exchange before you're allowed to combine their combine their private data with our public data. So I have to say, I'm proud of the team on this, because on security wise, we've ticked a lot of boxes. But I get the point. Certainly, you know, cloud, I would say it's certainly a lot more secure than it was in the past, but certainly with what we're doing with best practices is not something that's worrying us.
Yeah, it's an issue. I mean, it's like everything. Everything that saves you time and gives you more processing power also has its own side effects to some degree. We've got a lovely comment. I see somebody saying, gosh, we've got a Fly Emirates poster. How retro, the idea of flying. Yes, very, very, very apt point, I suppose. But there you go. That's the wonderful world of football sponsorship in North London these days. It's fascinating when you're looking at the way that the whole business is structured, because obviously, as you say, you were a spin out from one of those great universities way up there in the fens, and you have managed to turn that into a commercial business in the very relatively short to medium term. What's the biggest challenge that you saw out of trying to structure what was a very, very intellectual construct, maintaining the intellectual construct but turning it more into a business?
So we have, when we think about that as a business and getting our messaging across, yes, we're selling a complex product to very sophisticated people. Simplifying the message was the key to the success of the product. So we took a sense of humor approach in the beginning, and we described it as this: when we're dealing quant to quant, we call our quants and our customers' quants the wizards. And when wizards are speaking to wizards, clearly they understand and they get it straight away. And that's what BMLL was. When they looked at our data lab, understood the componentry within it, the amount of engineering that went into the data, the quant-to-quant relationship was fantastic. But then I think what BMLL did in the past, it relied on quants within those various organizations to upsell our business into their business, and that is a fundamentally flawed model, because as we joke internally, the problem is when the wizards upsell, they find a muggle sitting in the seat that owns the checkbook for these services, rather like me. And of course, if you don't explain to someone like me why this data is going to make a difference to my business, how is it going to increase my alpha? How am I going to attract more customers? How am I going to retain the ones that I've already got? Unless you can get that point across, you don't see the true value in level 3. And then, of course, having done that, you then want to understand, okay, I'm going to back test this. Does this really work? And that was the key, to get the message right from the top down rather than the bottom up.
Very interesting. Certainly, it's interesting because the quality of data that you have must allow for back testing, which is absolutely real to effectively what happened on the day. Because one of the biggest problems with back testing, say 20 years ago, was you had all the prices, but you'd no idea if there was actually any volume at any of the prices that you were going to transact at. So therefore, it was always difficult to have an idea. Whereas presumably you can give such a holistic picture of what's going on, people can do a much, much better backtest.
Well, with a backtest as well, you need enough history to do it. We were told by many customers originally, unless you've got 5 years of history, it's very difficult for us to run our models and our simulations on. Well, in October of last year, we announced a program where we have 5 years of level 3 data on the US equity markets. Now that's quite a statement. Curated, ready to go, off the shelf, 5 years of curated level 3 data. And since that point, we've had some very, very sophisticated funds around the world approach us for sample data sets that they're currently testing today, which is great. But no, the length of history is really, really important.
Yeah, it's fascinating. Go ahead, sorry.
And so no, and of course they're struggling to get that level of data from their current vendors today. So yeah, we're in discussions about that, and I know we may talk about that. We did an excellent piece with WBR in terms of survey that we went live last week, which we're really proud of.
Carry on. I was just about to ask you about it, so why not? Tell us more.
Well, one of the things we asked, it surveyed 100 buy-side customers. So WBR approached 100 buy-side customers, typically with between 10 and 50 billion of assets under management. So the true buy-side that you would expect. And when it asked them of those clients, whether they can lay their hands on level 3 data. They said 75%, the reason they don't use level 3 data is they cannot get it from their traditional market vendors. So 75% said the reason we're not using level 3 is they can't get it from their traditional market vendors. So yes, we're in discussions with large vendors around the world to help us scale the production of that data out to as many customers as we can get it.
Very interesting altogether. Ladies and gentlemen, I'm here with Paul Humphrey. We're working our way through not quite the entirety of the 15 petabytes of data that's in his wizardous lake over at BMLL Technology, but we are having a deep dive into big data. What would you like to ask Paul? He's got experience on the bank side, the exchange side, the IDB side, and now in the wonderful world of quant mathematical data. I'm sure you've got a question for him. Ask away on whatever social media you're on. Don't forget to give us a like along the bottom of wherever you're watching us today so that we can rise above the, well, funnily enough, products of other quant mathematicians, the search engine optimization, so that you can manage to allow more people to see these sorts of live streams during the course of time. And if you're bored at any point in time and suffering insomnia, there's always Exchange Invest, exchangeinvest.com, which is the daily newsletter of the world of exchanges. So at the end of that brief spurt, which makes me feel like a 1950s television show in the United States of America, back to Paul. Paul, if we're looking at this whole big data picture at the moment, what sort of advantage do you think that it's going to give to clients if they're able to suck in this data? Is it just about execution, or is it actually also, are there more issues to it?
So first of all, I think when we talk about big data, really the race is on for relevant data. So you get all of this data. How do you turn big data into relevant data? And the use cases that come from something like this are quite wide. So when you think, okay, you take a level 3 set of data across the harmonized European exchanges, and you think, okay, if you're in a seat where you're programming an algo, do you want that algo to send a trade to the exchange that's had the greatest amount of failed trades between the hours of 11 and 12 historically over the last N years, or the exchange that has the greatest market impact every time your order lands? Metric after metric like this. How long is your order resting on the book? Which one has the longest times, the shortest times? You can only get those levels of metrics if you followed all the orders through the exchange on that day to understand whether it got filled, partially filled, cancelled, corrected. Then you can answer those questions. Now, that's one use case just for programming algos. Clearly, when you're at an exchange, now you've got the primary venue today and you've got maybe 4 or 5 MTFs quoting the same stock. You want to know how you're performing. Every major exchange gets measured by analysts on 3 major KPIs: volume, market share, and yield. Yield being, of course, the average commission per order. Now, at any given exchange, let's just say, if your market share dips below 60%, it's an alarm bell. Of course, you can lower yield, market share will go up. If you do that too violently, your share price will tank. Managing those 3 attributes, answering the question of who is actually my best market maker, putting the right incentives in place, is a data science role. And many of the exchanges invest in deep-seated quantitative teams that manage that level of data coming through this. So understanding how your venue is behaving and how it's behaving compared to other venues out there is a full-time job.
So it's fascinating because what you're saying is actually then the data, because you've got such a deep and extensive pool of data, is usable by everybody, because we've talked a lot about the buy side and fund managers. And to that end, if you want to catch up, you can download the WBR report for free from the BMLL website. So that's something that you should definitely take a look at. That is the long URL we have there, but it's basically bmlltech.com. Go there and you can instantly poke around with a few intuitive buttons. You won't have to be a wizard in order to manage to find it. You can download the report and hear what 100 fund managers had to say. But it's fascinating because what you're actually remarking upon then is the whole issue has a very, very significant application, not just for the fund managers, but for the venues as well. And in a world where US stocks is 523,000 million venues, 50 of them or something, and the European Union is umpteen venues as well. I mean, more venues than vaccinations, I think, in V words. They all can basically benefit from seeing where they're going wrong.
So, for example, if you're running one of the challenger venues, and on one particular metric, you see that another venue is often the second best price compared to the primary on a consistent basis. And you can get that from level one. So take a particular stock, your particular venue could be often or not the second best price. And you're at a challenger venue and you're trying to pull flow towards you, and your liquidity providing customer will go, well, hold on, if I'm going to send any liquidity anywhere, I'm going to send it to the top two venues. Now, if you drill down into that data, take it on a level 3 basis, you might understand that actually the venue that's showing the best price or the second best price on a consistent basis doesn't actually have great fill rates. In fact, the percentage chances of getting filled at the price, which in this case would be equivalent to the best bid, best offer in Europe, actually you've got the lowest chance of fill rates. So even though they may advertise the best press prices, your chances of getting filled at that price are pretty minimal. Now, you'll only find that out from level 3 data.
That's very, very interesting. And obviously, I mean, it's a fascinating issue because it sounds to me a bit like racing car engineering, where they plug all the data in when they've come back off the circuit and discover all sorts of amazing, weird and wonderful things that the drivers quite often don't even spot themselves in terms of the minutiae of what's going on. And this is all taking place way faster than the human eye can manage to discern these days. And so therefore, presumably also, the level 3 data can be applicable in the post-match analysis, where you get, I don't know, the regulatory equivalent of Gary Lineker or somebody to come in and have a look at these things, because you can come up with a very interesting case. And presumably for litigation, it's going to be quite intriguing in the future, because people's merits, motives, and so on can be both questioned and defended according to what you can see in the quantiness of level 3 data.
Well, we can replay the entire order book for the day and even going back. So you want to find that particular order in the central limit order book at any point during the day, we can visualize the whole stack and we can replay the entire order book. So it is important. I think what's really important to say when it comes to this data as well, because at 30,000 feet, many data and analytics businesses look the same. The quality of this data is in fact, the curation process is what makes BMLL unique, in as much that curation process is done for you. And you've just got an ever increasing army of quants across this entire industry, having them hit the ground running rather than spending 80% of their time gathering data, harmonizing it, cleansing it, scrubbing it, doing whatever they do to it, means you either save 80% of their costs, or in the case of one of our tier 1 American customers, says, well, actually you make them 5 times more productive. And that's where the money comes in. So when you can do that and get that kind of compliment from your clients, you know you're doing something right. But I was astonished. You know, when I've run data businesses in the past, the percentage of my revenue that come from historic data products was very low single digits. And actually, the race is on. And it's not easy to replicate this data, that's for sure. And it isn't available from many places. So if you want historic data that provides you predictive insight, there is very few places to go.
It's absolutely fascinating. And I suppose the one way I could replay the idea that makes it so interesting is I'm surprised you haven't had an offer from Netflix yet for last week's GameStop data, because there must be a movie in there, I'm sure, without any degree of difficulty. Just the script writers just have to be able to understand Python and get their way through level 3. But certainly it's going to be, I mean, that's a really fascinating case, because we have all of these contrary thoughts, and every left-wing comedian across America spent the whole of the last evenings of last week talking about it, and yet actually you're going to be the only people who can actually fundamentally prove everything that went on and factually what's been happening.
I mean, we haven't got round to it this week, but we certainly did a lot of work on the Wirecard issue of 2020. We produced actually some metrics on that and put them out publicly. We might even have a one or two on our website, but we'll get round to it. We've already been asked some questions. I mean, at the moment, there's 45 of us at BMLL, and we're working rather hard to do what we're doing right now and coping with our growth. We've got a few open hires out there still to fill. So we don't really go in for one-off bits of consultancy. That's not our game at all. We build products that many want, and we build products that attract recurring revenues, which is good for the business model. But certainly we'll get around to looking at GameStop at some point, no doubt.
I'm sure GameStop's going to be an exciting topic for the next Christmas party. We may even be able to meet up for the Christmas party by that point.
That would be great.
Yes, we won't need pantomime season. We'll just replay GameStop and Nokia. We'll go to the early weeks of the last week of January, early week of February. I'm here, ladies and gentlemen, with Paul Humphrey. He's the boss of BMLL Tech after a storied and starring career throughout all aspects of the financial market infrastructure. But most recently, he's working in this huge big data industry. If you've got a question for Paul, we've got barely 15 minutes left, ladies and gentlemen, to talk about what's going on. And we've actually, at this point in time, scraped, well, I think in terms of the total number of words spoken in the whole of this thing, we're at sub 0.01 to the 10, I think, -8 of the total length of his actual lake of data, which tells you a lot, because I'm Irish and I talk a lot. Now,
do you know, just to say, I'm going to irritate my CTO. Talking about the size of our data lake, I can almost feel him wincing as I'm talking about the size of our data lake, because of course all good CTOs want to condense that data into a smaller data set as possible, which he does a fantastic job of. But of course I can't help talking about the sheer scale of it, because that's the background I come from. But no doubt I'm irritating him right now.
Yes, absolutely. No, but it's quite incredible, because the point is, what you have done is refined to all the elements that you must retain, which is still an utterly obscene number in terms of the sheer amount of information that's hanging around. It's just impossible for the normal mortal brain to take that on board. Well, certainly in my case it is. But then on the other hand, the good thing about going around to a meeting at BMLL Tech is that I was never for 1 second in doubt from the moment they said, "Good morning, Mr. Young," when I walked in, that I wasn't actually anywhere near the most intelligent person in the room. There was no danger with that whatsoever. What we're looking at here, you've got the whole world of big data. Everybody's raving about big data. Lots of M&As taking place. That's their business, and we're not looking to talk about that. But what do you see as the opportunity there? You've managed to get this fantastic 5-year view on, for example, US equities. You're building out in other places. And of course, the world's moving forward every day, so you're adding data as you go. How does BMLL then expand what it manages to look at, whether it's within the markets you're covering now, or do you add other markets? What do you do?
So first of all, today we're fairly golden in Europe in terms of coverage. And as I said, we've got the US data. We've got gaps. We haven't got Canada, we haven't got Brazil, we haven't got Mexico, and our Asian coverage is spotty. So clearly, goal number one, cover all global equity markets. We have futures today. We have CME, we have ICE, we have Eurex, we have a very good futures offering, and we have ETFs. We have TradeWeb included now, and we're looking to complete that data set. On from there, we get asked, and I kid you not, every day, including today, when are you going to have foreign exchange available on the platform? When are you going to have NDFs, government bonds, interest rates? Being able to understand the depth of level 3 data on all of those venues and where I should be sending my order. Now, that's the level of ambition for us. So the scale of this business, not only do we go to the quant world, as I said, we've internalized our platform and we're selling the data and analytic output to a much wider capital markets audience. As I start to build those new data sets, I've got a ready-made capital markets customer base that's already buying our data sets today. And every time we add new data sets, dare I say, the barrier to entry on this business gets higher and higher and higher. It's not something that, I mean, BMLL was formed at the end of 2014. It barely didn't sell anything until the end of 18. It took a long time to build the underlying infrastructure and to get that data on. So it's not an easily repeatable business. We've had customers that have looked at our data, looked at our product, and then thought to themselves, perhaps I can build this in-house. And some large sophisticated customers came back to us and said, actually, one, we can't, not in any reasonable time, we can't replicate it. And secondly, what's the point? It's all there, it's ready, it's as a service. We can just hit the ground and get on with it. So the more and more data we add to this, the bigger that barrier to entry gets. And who knows, I mean, when you look, dare I say, I think we've all turned into data experts in the last 12 months. We've all been looking, sadly, at trends of what's going on, collecting data and predicting where we go next, some to better results than others, of course. So people are used to seeing charts, they're used to seeing historic data, and they're used to having that predicted in the outside world. So I think there are other applications for what we do, but that remains to be seen. I'll concentrate on capital markets first.
Well, but I think at the same time, the whole opportunity within capital markets, as you're saying, is just absolutely vast in order to manage to keep scraping for the data. And certainly, I mean, I was smirking at the idea alone, leave the corporate bonds, the government bonds, the everything else. But when somebody says, when are you going to have the FX market on there, 24, effectively 6 and a bit for 365 days a year, that sounds like an awful lot of work for the wizards.
Well, we've got to work out what good looks like. So we have differentiating analytics today. So before we go and onboard those data sets, we've really got to figure out what problem are we solving. So listening to our clients, understanding what it is they're looking to solve that they're unable to solve today, because effectively that's how we built this product out. It was built out into a demand for a product like this that didn't exist. And dare I say, I think one of the reasons I joined this company and the idea of its scale going forwards is I truly believe that the demand for historic data products like this isn't fully cooked at all. The large systematics have got something like this under the hood. The large sophisticated tier ones know precisely what the systematics have got under the hoods. Dare I say, there are many out there that are not taking their trading decisions from deep, rich history that will become alive to the wonderful attributes that come along with it. So I think we're selling a product into a demand that isn't fully cooked yet. It's very, very exciting indeed.
I think that's going to be fascinating because, as you say, the cost that's involved in trying to manage to cook this for yourself. I mean, it's much more at the El Bulli end of the cooking menu than something that you're just going to knock up off the Gordon Ramsay cookbook menu or something like that, which is therefore giving us a lot of complexity as we go along. And actually, we've got another interesting question from Jonathan Campbell. Lovely to hear you so active this evening, Jonathan. So, given the latest Brexit exit issue, who is going out to you the most? I think Jonathan's talking about, given in relation to all of these things we're not going to discuss in terms of what is equivalent or not equivalent and so on. I think Jonathan's asking you, are you getting more calls on the home side of the channel, closer to North London, or are people in the continent more interested in what's happening? That's a question. Clarify it for me, Jonathan. Sorry. Paul.
Yeah, so sorry you were breaking up on me there slightly, Patrick. So actually it's an interesting one. On our Plato metrics environment, you were able to see from day one the shift to the new European venues. So where Turquoise launched their new venue, CBOE did the same, and Aquis did the same. Immediately you were able to see the shift in volume from their traditional venues to the new venues. So it wasn't that we were getting more phone calls from one side of the English channel or the other, but certainly knowing where that venue was and down to the actual individual shares. And people could see that for free on Plato Metrics. It was all there and it worked seamlessly. I have to say, touching wood, it was quite remarkable, but it worked.
Fascinating. Great to know that it worked. That's the most important thing. And one of the things which actually in GameStop in the last week has been great to see all of the exchanges and platforms having 100% uptime. Pity that some of the brokers couldn't quite emulate it in terms of uptime. Leaving aside clearing issues, which are a whole different bag of worms to look at. I hope that answered the question, Jonathan, that you were asking us this evening. Thank you very much for your input. So we're into the last 6 minutes here, ladies and gentlemen. Rush in quickly if you want to get a question to the masters of big data at BMLL this evening. Paul, if you look at what is the most exciting thing someone can do with your data right now, what do you think it is?
Well, I'll tell you what, that's a great question. So certainly when we're selling our product to the alpha generators, sadly, Patrick, they never come back to me and say, well, we made an absolute fortune out of the insight that we got from your data because we applied these strategies to it. They're never going to tell me that. I'd love them to, but they won't. What they do with our data and the strategies that they derive from it is completely their business. But when I see venues use our data to demonstrate the strength of their venue, and they use that in their point of sale material and go, look, these are the 5 reasons you should be trading on our venue. The great thing is as well, there's another 5 metrics we're giving the venue themselves as management information where actually they don't perform too well to their competitors. So they know precisely what they've got to do to improve their performance from the very same data. So there'll be data that we can supply to them used in the outside world that drives order flow to their venues. And there's metrics that we give them internally on the areas where they're not performing so well that they can then take that on board and seek measures to improve it. That is really satisfying when we see that and when we see added increased order flow. The other thing is, I say you need to be a data scientist to drive our platform. Clearly, you need to be able to write a handful of lines of code. But actually, I get corrected by my quants all the time internally. You don't need to be a full-blown quant. If you've taken a module or 2 at university on code, even if you're an economics student, whatever, you can get hold of the platform and hit the ground running. And actually, one of the most satisfying things to see is when we're putting our platform into various customers, watching them become self-sufficient on the platform and draw down hundreds of thousands of limit order books to analyze, and we see them getting stuck into the data. It is incredibly satisfying, and the product then becomes very, very sticky indeed as they start to use it every day.
I'm sure it's an incredibly sticky platform once you're used to it, because it's got to be the ultimate, and I don't mean this disparagingly, but it's the ultimate Fisher-Price activity center for financial markets. I mean, the old data stream in the 1980s was intriguing, because you could go and say, oh, look, finished truck sales are essentially a very good early indicator of where the FTSE 100 is going to go, or some other completely non-correlated number. But this is really seriously interesting, because this is actually taking all the data that is relevant and giving you the possibility that you can have a microscopic edge for execution. You can have a microscopic edge as the execution venue. You can have some sort of an edge as a fund manager in understanding how to therefore deliver that little bit of added alpha for your clients, which is...
You do realise, Patrick, that this is the brightest team that I have ever run in my career, and you probably put 35 of them in tears right now, calling their system Fisher-Price.
I know. Well, unfortunately, just so that everybody at BMLL understands, I make my living by managing to make stuff really, really simple so that investors can understand it. So therefore, on that basis, I hope you don't mind the fact that I've just described your system as 15 petabytes of Fisher-Price Activity Center. But it is nonetheless, I think, an apt metaphor, and that's my story, and I'm sticking to it with 2 minutes to go on the clock before the end of the show. But look, it is really, really incredible. But what is fascinating, again, is to go back and say, you look at so much of it, and you look at what goes on, and you look at all of the program you put out, and actually it is based around an awful lot of data scraping and the whole idea of Python, which is itself a genius piece of, data scraping is a genius piece of invention, but relatively simple.
I mean, this is the bit that was a revelation for me. Having been in this industry for so many years, having understood the data business, the predictive power that comes from history. And literally, it was the byproduct of every data business I've ever worked in. It still is today. You think about the large data vendors, their historic data product is what they collect from real-time data. Yet all the future insight, the monitoring day-to-day, real-time, we all know the power of that, of course. You can't drive the applications you've got without it. But if you really want insight on your trading strategies for your research of where you think those markets are going next and how you should be behaving, and doing that in nanosecond time, all of it is in the history if you've mined it, and if you've curated it in a way where you can actually use it. It's been astonishing to me, an absolute revelation, I have to tell you.
Well, that's actually a brilliant prelude, because in a few weeks' time, we've got one of the leading figures from the Foundation of Study of Cycles is going to be on the show. So I'm sure he's sitting this evening going like, hallelujah, brother, because you're obviously speaking his language entirely. And I don't know that he's got a 15 petabyte lake of data, but it's a fascinating point. I mean, seriously, it's a fascinating point looking at the whole thing. And it's quite intriguing altogether. Now we have a question just come in from Patrick Pinnock, who I don't seem to know, and you seem a tad energized. A few woke employees. What do you mean? No, at this point in time, it was a question that came in, which I was reading, dear Patrick, from Jonathan Cowan. I think he was using a little bit of slang. What he was trying to say was there are security risks potentially within the cloud if some employees, for whatever reason, happen to be annoyed or aggrieved over the way that the company is being run. And that could relate to the coffee machine not working, quite possibly, who knows what. And that could cause a problem within the overall business of the management of the cloud. That was actually...
Certainly wasn't our comment, was it?
It wasn't our comment. We did not originate that particular mark. It was Jonathan Cowan did so. Thank you very much, Jonathan. I think he was typing rapidly on his keyboard in order to get the point of a question. Thank you very much, Patrick, for your intervention. Really appreciate it. Good to have you on the show this evening. We are talking about all sorts of aspects of big data, but sadly, the one thing that has happened to have run out is the number of seconds, and I can't even manage to work out in my head how many seconds are in 61 minutes. But at this juncture, I have got to say thank you very much to Paul Humphreys. What we have taken away this evening, and I can only give you 3 quick takeaways out of that mountain of big data that we've had. Well, from a 15 petabyte lake of data that's being data scraped at all points in time, that's giving us this incredibly rich, beautiful source of information that's 5 years long in the United States equity market and so on across the world. As Paul has said, the CEO of BMLL Tech, Data is the race for relevance. I think that's an absolutely magnificent statement. It's been a joy also to hear about Paul's, I think, awesome stories about managing 9 days in the office with his team and 11 months working remotely is some sort of a record. I'm not sure it's one anybody would have volunteered for in the first place, but it is a record and it is incredible. And it's a great testament to the company, because what we're looking at here is, and here I will use Paul's language, W2W economy, the wizard to wizard economy, as he described it, in terms of the people who are shaping this data and delivering us so much insight in terms of what's going on and what can we possibly take away as a lesson from the day of this big data experience in the wizard to wizard economy, ladies and gentlemen. Don't be a muggle. My name is Patrick L. Young. I've been here with my magnificent guest this evening, Paul Humphrey. Paul, thank you. It's been an absolute joy. If you want to read some really simplistic stuff about petabytes, exabytes, gigabytes and data, you can always try my book, Victory or Death, which is nothing
on the shelf.
This is the achievement of BMLL technology, but nonetheless, it happens to pay me, so that's why I mentioned it. Check out the bmlltech.com site. They've got that fantastic WBR report, many more snippets of stuff that you would really like to look at. Thank you very much to everybody who engaged today, particularly Jonathan Cowan for your several questions. Thank you, William, for your input at the last moment. Glad you enjoyed it. Thank you, Dayan, for offering us, I think the first point in time, we've had management feedback live in real time, which has been absolutely fantastic. And thank you very much, Patrick Pinnett. Really appreciate you checking out, because the most important thing with data is that we check the provenance of the source. You did that this evening. We really appreciate it. We're going to be back next Tuesday, same time, same place in cyberspace, with the magnificent, the incredible, the truly larger than life, Mr. Lee Hodgkinson, another boss of Euronext, no less. I'm looking forward to that. Paul, thank you very much. Ladies and gentlemen, have a great week in life and markets. My name is Patrick L. Young. Good night.
Good night.